Hi everyone, Donnie Schultz, Embrace Home Loans here with your market update for Friday, January 28th. Pretty much same old story for interest rates that we've been seeing in the last couple of weeks. We are in a very similar position rate-wise as we were last Friday and the previous Friday, but we have seen a lot of volatility as the week has gone along. So we saw volatility last week, we saw volatility this week. That should definitely be concerning for our buyers. If we look at these charts, as these bars move lower, interest rates move higher. January 3rd, first trading day of the new year, we started selling off. We had a little bit of a pullback going into the Federal Reserve interest rate announcement. I'm just going to switch over to the 1 month chart. So we had this big sell-off. We pulled back a little bit going into Wednesday's interest rate decision. Markets were hedging against the possibility that the Federal Reserve was going to come out, maybe be a little bit more dovish because of the sell-off in the stock markets. Market participants thought that maybe the Fed would try to provide some support there. They came out and they said, hey, this is the plan. We are going to be increasing rates. We are going to be reducing the amount of mortgage-backed securities that we're buying, and we're going to be reducing our balance sheet. And they pretty much said that they are not concerned about the impact that has on the stock market as of Wednesday. So we lost all those gains Wednesday. We have pulled back since then, Thursday, Friday, to finish off pretty much even again week to week. So, a lot of volatility for consumers. Right now, the mindset should definitely be lock in your interest rate. The most likely scenario that we're seeing here is that this move has been so steep and so quick that rates are just consolidating. They're waiting for these moving averages, which are these lines up here, to come down a little bit closer, and then this upward trend in interest rates is most likely going to continue. If we go to the underlying conditions that we've been talking about for the last 2-3 weeks, Fed is the biggest buyer of mortgage-backed securities. As they take their money and stop buying, that's going to put pressure on interest rates. So for buyers, most important thing right now, lock in your rate. I was watching something on Instagram Live yesterday, and the advice that was being given by a lender was not to lock in your rate, to take a 30-day lock instead of a 90-day lock, because that rate might be a little bit lower. But if rates are going up, that's going to put your buyers, my buyers, in a tough position, and it's going to cost them money right now in this interest rate environment. So buyers want to be locking. Most lenders will be able to offer at least a 60-day lock. We offer a 90-day lock. We also have a free 15-day extension. So every rate that we lock in on a purchase is 105 days of coverage. That's going to cover the majority of contracts. If contracts are longer than that, there should be options to lock in today and potentially extend that out without being subject to interest rate increases. So that's definitely planning that should be talked about with buyers. It's something that should be put in place, and it's something that should be taken advantage of today. One thing that buyers should be aware of is most lenders do have some type of float down policy. So if you lock in your rate today and they drop before you get to closing, you should be able to renegotiate your rate lower. I could speak for our float down policy. If we locked a rate today at 3.5% and those rates drop to at least 3.25%, within 30 days of closing, we'll be able to get the lower rate at a very small fee. So that really limits the downside to locking in. All risk is in floating right now in this market. So I'm sure not going to be too many open houses this weekend with this storm coming in, which is tough, especially with the inventory. If you need anything, have any questions, I'm always available. Talk to everybody soon. Have a great day.